My name is Gregersen, owner and founder of Bighorn Capital Fund. So today I'm going to be talking to you guys about Cathedral Group, our Cathedral Group Offering. All right. So the flow today, I'm just really quick going to highlight it, guys. I want to go over sort of my why and why I'm passionate about this. And then I'm going to go into like what the offering is. And finally, I'm going to tell you guys like how we're doing it, how we've done it, and how we're currently doing it. Okay, a little bit of background. So if you guys have met me yet today, hopefully you'll remember me as the one guy who invests in Wyoming, right? Anybody know any investors that invest in Wyoming? Usually not too many hands, right? And I actually live in Houston, Texas. So you're probably like, why is this guy in Houston invest in all places of Wyoming? So a little of the story. I grew up in Wyoming, spent all my life there, graduated from college, and then I went down to Houston. So you can see up here at the top, worked in corporate America for 12 years. I was a petroleum engineer, did that, worked in the field. But while I was working in oil and gas, I was able to build out my real estate company. The first thing I built out was direct to seller. So we source all of our deals in-house. The second thing we do is in-house construction, right? We've got 4 crews now working for us across the state of Wyoming, all the way up into Montana now. And then thirdly is property management. We have now 420 doors under management and about $50 million in assets. So I built a lot of that while I was at Shell, and then I left Shell 3 years ago to do this full time, all right? But the why, okay? So you guys can kind of see my why up here, but I try to challenge you guys to think about this. And I know a lot of you guys are gonna look at this from the perspective of you guys bringing your investors in this. And I'm hoping that you guys, they can resonate the way I resonate with my investors. So as I built out all those companies, I was working my W-2 job for the 12 years. I enjoyed that part of it. I enjoyed getting to be an entrepreneur and build something. But what I really found out is I enjoyed helping other people achieve that same thing. Right? So my big thing was when I used to be out in the field away from my 4 boys, and I was in the middle of West Texas or up in Alberta, Canada, or on a platform in the middle of the Gulf of Mexico, I often asked myself this question: what if I didn't have to be out here choosing work instead of my family? Right? It's a question you guys are probably asking. I think a lot of people ask that. I asked myself that many times, and I took action, and I built all those companies, and I did all this where I'm at today. But I understand a lot of people aren't going to go do that, right? So my mission and my why is, how can I give other people that same opportunity where they can create that financial freedom to where it might not be today, it might be somewhere down the road, but they can ultimately, they know they can answer that question, or at least they can have the choice to say, you know what? Today is the day I'm going to choose my family, or whatever else you want, choose that over work. So that's my bigger mission, is to give other people that same opportunity, because this a picture kind of depicts it all. That's me and my 4 boys up on stage at my 2-day event. We did our first one in July. And it was just really cool to get them experience it and help other people, okay? So that's the why, right? Now let's talk about the what, the deal, all right? So some of you guys could see numbers. I know some of you guys are most excited about this slide, all right? So our projected IRR is 20.45%. It is a 5-year hold. So we're doing quarterly distributions. Cash on cash return is 8 to 17%. The reason why that fluctuates a lot is, I'll show you guys in a second, we're doing a mix of fix and flip and multifamily. So the fix and flip drives a lot of the cash flow early on. And that's actually the very reason why we combine fix and flips with these multifamily value adds. Because the fix and flips, as I'll show you in a second, they turn pretty quick, and they can really give us distributions like now, today. And our initial target raise is $5 million, minimum of $50,000. So this could be great for an individual investor to do just the $50K minimum. But what I want to show you guys as fund managers is the A-class shares, okay? So the A-class shares, you can see right over here, they get a 14% preferred return, right? So very aggressive, but I wanted to be able to go on this fund. I want to be able to raise a lot of money, and I wanted to incentivize other capital raisers to where they could come in, and then you guys can divide up that 14% pref however you want, right? Now we're going to pay out, if you have 250,000 or more, we're going to do a 14 pref, okay? And then here's the waterfall up on here. I wanted to give you guys kind of the simplest way to understand it, because if you try to articulate this to somebody, you lose them, right? But this little chart, first 2% goes to the management fee. Then from that point on, you're into your pref. And again, your pref, it's a waterfall, right? But I think where you guys would probably want to come in is the A class. All right, you could come in as a C and just do 50,000. All right, but once you get past your pref, it's an 80-20 split. And then I incentivize myself on the back end, right? So once we hit 22, at that point, it's 50-50. So once I've hit that return metric, now I get to go participate a lot more on the deal. So that's why we set it up that way. All right, so the other piece is we're doing a lot of buy and holds, right? So we're getting the bonus depreciation. So I modeled it out based on our kind of current deal flow. And again, this is a projection, but the easy math on it is if you put in 100,000, you would have, it's right over here on the far left, but if you put in 100,000, you could expect around a $55,000 write-off in year one from bonus depreciation. So there's some really cool upside. And again, the cool thing is when I first modeled this out last March, we didn't know what was gonna happen. So I modeled it out at 9.6% before, but thanks to the Trump's beautiful bill, we're up to 20%. And that makes a big difference on the bonus depreciation. Okay, now let's get into so I showed you the what, right? The numbers. Now I wanna show you the how we're doing it, okay? So initially when I was presenting this offering, like when we first kicked it off earlier this year, I was talking about our track record and what we had done, all right? And I wanna show you that first. So thanks to Lance Peterson, if you guys listen to him today, I started doing this, our track record. So I've now got 150 deals in our track record vault, which is in this little Google sheet. I link all the settlement statements, before and after photos. You can't see it all over here, but I talk about how much our investor made, what the turnaround time was. This is one of my favorite things I'm able to give to our potential investors because they can now go in and do their own due diligence on our track record. So I've got that document for you guys. The other one is, this was one of this is a super relevant one because I'm just going full cycle on this deal. So this was in 2022 with a 50-50 partner. This is when I first tried to kick off my fund, all right? 2022, I'd actually had not joined Avestor, paid an attorney to generate my documents, and I went and started raising money for this deal right here in Casper. Well, the thing was, it was the first time I was raising money at scale, and I was getting a lot of people interested, but I didn't have somebody ready to go put down 100,000, 200,000. And so anyway, I partnered with one of my good guy I knew in our neighborhood who had done a couple deals with me. We took down this one, and I'll save you guys the kind of the details of it, but we completely transformed this 72 unit apartment, and we created, right now based on the appraisal where it looks like it's gonna come in, is like 2.77 million in forced depreciation. And this is my favorite part, right? So me and my partner both put in a little bit of cash, and he used a line of credit on his stock portfolio, but now we're gonna get all our money back, and we're each gonna divide up about 800,000. So about 400K each cashed out, and we keep the asset. So that was one of my favorite ones, and we're literally going through, actually we just got the appraisal ordered last week, right? The other one, this was my first offering that I did through Avestor. So this was a simple, easy one. Again, learning from my first one, when I was trying to get people to come in and do equity for 5 years, wasn't quite getting the traction I wanted. So I'm like, let's make it simple, Casey. So what I did is this was a deal in Southwest Wyoming. This is only about 45 minutes from Park City and about an hour from Salt Lake, right? So this is 45 units. We just did this deal with straight debt, all right? I just told my investors I'm gonna pay you 15%, which again was pretty aggressive, but it was the first time I was putting multiple investors on the same loan, right? So we did 15%, turned out really good. Now this one's been fully updated. We're now over 90% occupancy, and now we're on the path to refinancing this one. So once I refi this one, I'll be able to pay back all the investors and then recycle, and then I'll keep the asset. So I don't have to split the last one. This one was great. I split it 50-50. This one, I'm paying 15% and I get to keep. All right? So now, where we're at now, the best thing about the offering I'm talking with you guys today versus 3 months ago is these are deals we've already completed within the fund, right? So these are 2 case studies. This one actually just closed earlier this week. We made $84,000 on this flip. This was in Laramie, Wyoming. This is just a little bit about what we bought it for, what we rehabbed, and what we sold it, okay? And this second one was less of a profit. It was $18,000, but still made some money. And we're closing that one next week. So I wanted to show you guys, this is when we're doing our distribution this month, so we're paying for the last quarter, because as I mentioned, we pay quarterly, like we're paying off of this deal. So we're gonna be able to hit our pref, and then I've talked to Sanjay a lot about this. What we're doing is we're gonna if we can hit the pref, we're gonna hit the pref and pay that quarterly. And then at the end of the year, we'll go pay the additional, basically the WaterFall part of it, if that makes sense. So this one, we could have easily distributed more, but we're gonna keep it reinvesting, and then we'll pay more at the end of next year. All right, guys, so the other part of this one, I wanted to show you, we bought this 29 unit apartment, or it's actually a motel conversion. It's down here in Wheatland, Wyoming. So you guys, just to geographically get a feel for it, that one's in Wheatland. The one I just showed you is in Casper. Here's Cheyenne, here's Denver, right? Over here was that other one. But we do the entire state of Wyoming. But I just wanted to show you another cool project that is part of this specific offering I'm sharing with you guys today. So with that, if you guys want to, I see I'm out of time, so I knew I'd keep this slide. I do a lot on YouTube. I share a lot about what I'm doing. That's how I raise a lot of capital. So if you guys want to dive deeper, you absolutely can. I did share my contact up there. If you guys don't, I'm sure a lot of you guys I'll connect with afterward, but please do connect with me.